Level 1. You download your first trading platform because of a tutorial you saw online that promised the world. The interface is ugly, the terminology is confusing, and you don't understand half of what a candlestick actually represents. You are a tourist in a professional world, using tools you didn't build to exploit market moves you don't yet comprehend. You open a TradingView account and start adding every indicator you can find, RSI, MACD, Bollinger Bands, thinking that more lines on the screen will give you more certainty. You treat the market like a vending machine where you just need to find the right buttons to press. Your first trade is a strange rush because you are accessing a global financial system that was supposed to keep retail traders like you out. When the numbers turn green, your friends think you're a genius, and you let them believe it because the truth is less impressive. You think you've cracked the code through skill, but in reality, you just got lucky on a random pump. Something fundamental shifts in your understanding of how money works, but you are still just pressing buttons. You don't have a stop loss because you believe in the company or the coin. You are a tourist using professional work without understanding the underlying architecture. You realize that in order to stay, tourism must become residency. You start reading about market structure and packet-sized data points on Investopedia. You realize that the gurus you followed don't actually know anything, they just teach to make money from you. You decide to stop being a script kiddie and start treating this like a real language to be learned. You realize that the secret indicator doesn't exist and that you are dangerous to your own bank account. The isolation starts here as you begin the longest, darkest, and loneliest journey of your life. You spend your nights in a library or a spare closet, watching endless YouTube videos, trying to piece together a strategy that makes sense. You are strategy hopping, trying order blocks one week and Fibonacci retracements the next. You blow your first account, which you realize later is just the unofficial initiation fee to the markets. You feel like a heroin addict because you don't know what you're doing, yet you can't stop looking at the charts. You lose sleep watching the London session open at 3 a.m. because you've heard that's where the volume is. You lose relationships because you can't explain why you're staring at Euro-USD charts instead of going out. The obsession starts to feel like a purpose. Even if your P&L is a sea of red, you start a trading journal, but it's just a record of your failures and emotional outbursts. You learn that the problem isn't the technical analysis, it's the behavioral focus. You read Trading in the Zone by Mark Douglas and realize you've been treating a probabilistic game like a personal vendetta. You are tired of losing money and finally develop a bit of extreme patience. You decide to stop being a gambler and start treating this as a business with a standard operating procedure. You stop trying to trade everything and finally decide to specialize. You realize the field is too vast for generalization, so you choose one market, perhaps Forex or indices. You commit to mastering one setup, like the 15-minute opening range breakout or a specific reversal pattern. You become obsessed with the head and shoulders pattern, realizing it's not just a drawing, but a shift in market structure. You learn to identify higher highs and higher lows with the snake trick, following the trail the market leaves behind. You stop using 20 indicators and focus only on price action and maybe the 50 EMA as a hood for your engine. You treat the area of interest as your only entry point, refusing to take a trade if price isn't at a valid support or resistance level. You learn that not trading is also a part of the job. You sit on your hands for days waiting for the market to come to your zone. You use a demo account or a very small cash account to prove consistency over 6 months before risking significant capital. The strange rush of pressing buttons is gone, replaced by the quiet discipline of a professional. You no longer look for moonshots. You look to stack little wins. You realize that you make money when the market moves, not by being involved in it all the time. You understand that a break and retest is your most reliable friend. Trading becomes boring and mechanical because you have a written trading plan you follow like a robot. You transition to using prop firms because you realize trading your own $100 won't buy you freedom, but managing $100,000 of firm capital might. You build a routine based on consistency, not motivation. You understand liquidity and market structure at a level that feels like seeing the code in the matrix. You only trade in the London and New York sessions because that is when the fighters are actually in the ring. You understand that risk management is the cornerstone of everything.
It's the difference between looking like a genius and looking like a heroin addict. You risk only 1 to 2% per trade and never move your stop loss. You start to see results like turning $100 into $3,200 or $8,000 through aggressive scaling and precision trade management. You use confluence trading, requiring at least 3 or 4 logical reasons before you swing the bat. You look for a minimum 1 to 2 risk-to-reward ratio, aiming for 1 to 4 to get a free trade out of your winning momentum. You track your emotional state in your journal, noting how you felt during drawdowns versus wins. You stop watching strategy videos on YouTube and only watch for psychology. You have achieved a level of mechanical habits that make your execution seamless. You are making more money than your parents ever thought possible, yet you stay quiet about it.
The final level isn't about the money. The money is just a scorecard for a game you've already won. You have become a ghost, detached from your self-worth and your P&L. You recognize that making money is a byproduct of the person you had to become to survive the market's teeth. You transition into long-term investing or dividend growth to protect the wealth you've extracted from the machine. You live a modest life because you know that attention is a liability. You spend your time helping others, providing the roadmap you wish you had when you were a tourist. You watch new script kiddies post their green screenshots, and you feel a faint sense of irony, knowing most won't survive level 2. You understand that the human vulnerabilities of greed and fear are never patched. They are part of the hardware. You don't trade on shit personal days because you know your mind is the most expensive tool you own. You achieve a level of self-transformation where trading was just the vehicle to master yourself. You sleep better, you travel without charts, and you build relationships with people who know your real name, not your trading handle. You realize that the market will perpetuate itself, regardless of your participation, and you are okay with that. The past lives in archives, and your cryptocurrency retirement fund sits in cold storage, too dangerous to move, or perhaps just unnecessary. You just keep working, not because you have to, but because the puzzle is still beautiful. Whenever in doubt, you simply set and forget.